Do you need to charge sales tax or VAT on digital products? A plain English breakdown. Selling an ebook to a fan in Berlin and one in Ohio can trigger completely different tax rules. Here's how to tell what applies to you. You sell a $19 ebook. One buyer is in Ohio, the next in Berlin, the one after that in Manila. To you, it's the same product and the same checkout. To 3 different tax authorities, it might be 3 completely different transactions. One tax-free, one that legally requires VAT collection, one nobody's currently chasing you about. This isn't a loophole to exploit or ignore. It's just a set of rules nobody hands you a syllabus for when you open your store, fan and start selling. This guide won't replace an accountant, but it'll give you the mental model to know when you actually need one. First, untangle 2 totally different taxes. The confusion almost always starts with treating tax as one blob. It isn't. Income tax is what you owe your own government on your profit, based on where you live and how much you earned. Same as if you'd freelanced or driven for a rideshare app. Consumption tax, VAT, GST, sales tax, whatever your region calls it, is separate. It's charged to the buyer at the point of sale, based on where they live, then remitted by you to their government. You almost certainly already handle income tax. The part that trips up creators selling internationally is the second system. Because digital products get taxed differently from physical ones almost everywhere. Why digital products get special rules? A customer buying a downloadable course doesn't need to be anywhere near the seller. So many governments rewrote consumption tax rules for digital goods to tax based on the buyer's location, not the seller's. That single shift is why a creator in Texas can suddenly owe European VAT. The EU and UK. VAT applies from sale number 1. Sell a downloadable ebook, template, or self-paced course to someone in the EU or UK. And the general rule, the EU's framework for electronically supplied services, is that VAT is due based on the buyer's country, with no small seller exemption. It applies from your very first sale. Rates vary roughly 17% to 27%, depending on where the buyer lives, which is exactly why this feels unpredictable if you price everything as one flat number. The good news: the EU's one-stop shop, OS, registration lets a non-EU seller register once and remit VAT for all EU buyers through a single return, instead of registering in 27 countries separately. Live coaching, webinars, and one-on-one calls are usually different. Rules like this target automated, self-serve digital products. The ebook that delivers itself, the pre-recorded course. A live one-on-one coaching call or webinar you personally show up and run is typically treated as a service, not an electronically supplied good, and often falls under different, sometimes more forgiving rules. One more reason a mixed catalog, downloads, live calls, and courses side by side, is smart business, not just variety for its own sake. The US. Sales tax is a state-by-state patchwork, and thresholds matter. The US has no federal VAT. Each state runs its own rules. And since a 2018 Supreme Court ruling, South Dakota v. Wayfair, states can require out-of-state sellers to collect tax once they cross an economic nexus threshold, commonly around $100,000 in sales or 200 transactions into that state per year, though exact numbers vary. Below that, you're typically not required to register there at all. Several states also exempt digital products from sales tax entirely, while others tax them like physical goods. There's no single national answer, which is why generic "do creators pay sales tax" advice is nearly useless without naming a state where your payment processor fits in. Many US states have marketplace facilitator laws that shift the collection burden onto the platform processing the transaction, and Stripe has its own tax tooling. Stripe Tax can automatically calculate, and in some setups help collect, VAT and sales tax at checkout. Since store.fan lets you create your store and connect Stripe in one click or add a PayPal email, much of the collection mechanics live in the processor you already use, not something you build from scratch. That doesn't erase your responsibility to know whether tax applies, but the technical lift isn't yours to invent. Pull last year's revenue by buyer country, real volume from the EU or UK. Check your home state's sales tax rules for digital goods specifically, near 6 figures in one US state. Look up that state's economic nexus threshold before you cross it. Split your catalog mentally. Automated downloads courses versus live calls webinars, often taxed differently. Confirm your payment processor's tax tools are switched on for the regions you actually sell into. Set aside a rough percentage of revenue for tax, rather than spending every payout in full. Should you build tax into your price, or add it at checkout? Most successful creators price digital products as one clean, tax-inclusive number. $19 to not $19, plus whatever the buyer's country charges. Because a fluctuating final price at checkout is a well-documented conversion killer. If you owe VAT somewhere, you're absorbing it out of that $19 than $19, which is simpler for everyone. That's worth factoring into your margins. A pro plan with 0% platform fees leaves more room to absorb regional tax than a setup where fees are already eating into every sale. What this actually means for your first year. If you're just getting started, your first 100 sales, first few $1,000s, you're very likely below every threshold requiring active registration. These rules exist because the internet made cross-border selling trivial, but enforcement mostly targets real volume, not someone testing whether their audience wants a $9 template. The mistake isn't selling before you've built a full compliance stack. It's never checking again once revenue gets real. Glance at your buyer geography every quarter, the same way you'd check your best-selling product. 5 minutes. And it's the only way to catch a threshold before it catches you. The bottom line. Nothing here should make you delay launching. Tax obligations scale with revenue. A problem you earn, not one that blocks you from starting. The creators who get tripped up are the ones scaling fast without ever glancing at buyer geography, not the ones who spent a month understanding VAT before their first sale. For more on pricing, payouts, and running the money side of a creator business well, the blog has more guides. And a live example store shows what a fully built-out catalog looks like in practice. Key takeaways. Income tax, what you owe on profit, and consumption tax like VAT sales tax, what the buyer owes on the purchase, are two totally separate systems. Don't conflate them. VAT on digital products is generally based on the buyer's country, not yours, and many countries expect it charged from the very first sale. No minimum threshold US sales tax is state by state, and usually kicks in only after you cross an economic nexus threshold in that state. Often measured in dollars or transaction count per year, marketplace facilitator laws increasingly shift the collection burden onto payment platforms, not solo creators, worth confirming with whoever processes your payments. When in doubt, price to include tax and treat compliance as a scaling problem, not a launch day one. Most new creators are nowhere near the thresholds that matter. Start your creator store, free, at store.fan.